2 pairs, 1 setup. The FOMC minutes are about to break the dollar's consolidation. EURUSD 1.1600 is the trigger, break targets 1.1680, rejection targets 1.1494 GBPUSD. 1.3550 is the pivot, break targets 1.3650. Rejection targets 1.3420. Full double analysis with exact scalp and swing levels in the main video. The US dollar's exceptionalism has been systematically dismantled over the last 2 weeks, and 2 of the world's most traded currency pairs are now sitting on a powder keg that's about to explode. We've got the euro to US dollar trapped inside a tight 1.1554 to 1.1600 consolidation box, and the pound sterling to US dollar pivoting around the critical 1.3550 zone. Both are waiting for the same spark, the July FOMC meeting minutes. But here's the thing that most retail traders are missing. The real catalyst isn't just what the Fed says, it's what the bond market does in response. And that response will affect these 2 pairs very differently. I've seen this exact divergence 3 times in my career. Twice it led to a violent reversal in the dollar, once it didn't. The difference was always the velocity of the yield move. And with the UK CPI and Eurozone CPI hitting the tape before the FOMC minutes, we are going to get a preview of that velocity. Today's calendar is an absolute minefield. UK core CPI at 2 a.m. Eastern, Eurozone final CPI at 5 a.m., and then the big one, the FOMC minutes at 2 p.m. If you're not positioned correctly before that 2 p.m. release, you're essentially gambling with the house. Odds against you. In this video, I'm going to give you a complete roadmap for both pairs over the next 24 hours. We'll start with the shared fundamental picture, then dive into each pair's technical structure, and finally, I'll give you my specific scalp and swing levels, including exactly where I'll be wrong on each trade. Because knowing where you're wrong is more valuable than knowing where you're right. Here's my bottom line heading into the next 24 hours. For both euro to US dollar and pound sterling to US dollar, the bias is cautiously bullish, but with a major caveat: we need to see conviction breaks above their respective resistance levels. For euro to US dollar, the invalidation level is a daily close below 1.1494. As long as we hold above that, I'm treating pullbacks as buying opportunities. The key breakout level is 1.1600, a clean break above that targets 1.1680 for pound sterling to US dollar. The invalidation is a daily close below 1.3432. The critical resistance is 1.3550. A decisive break above that targets 1.3650. But here's the twist. These 2 pairs have different momentum profiles right now. The euro to US dollar has an ADX of 22.08. That's a weakening trend, which means we are in a consolidation that could resolve either way. The pound sterling to US dollar has an ADX of 29.42. That's moderate trending momentum, suggesting a more directional market. So while the fundamental drivers are similar, the technical setups are distinct. Let me ask you this before we dive deeper. Which pair do you think has the higher probability of a breakout today? Is it euro to US dollar with its cleaner range, or pound sterling to US dollar with its oversold condition? Drop your answer in the comments. Fundamental drivers. Dollars fading EDG. Both the euro to US dollar and pound sterling to US dollar are primarily driven by the same macro forces right now. The US dollar index has fallen below its key EMAs and is searching for psychological floor support near 99.38. Why? Because the data has been unequivocally soft. July US retail sales came in at -0.6%. That's a collapse. CPI and PPI have both cooled faster than expected. And the Federal Reserve's interest rate range of 3.50% to 3.75% is now essentially matched by the Bank of England at 3.75%, while the European Central Bank is only slightly lower. The historical dollar carry advantage, which used to be a major tailwind for the greenback, has nearly evaporated. What stands out to me is not the headline CPI readings, but the 10-year yield reaction. That's where the smart money is watching. We've seen a dramatic flattening of the US yield curve, which typically signals growth concerns. If the FOMC minutes reveal deep worry about economic momentum, we could see the 10-year yield drop below 3.5%. That would be a green light for both euro to US dollar and pound sterling to US dollar to break higher. But there's a geopolitical twist. Growing friction in the Middle East and tariff escalation warnings continue to offer sudden safe haven floor support to the dollar. That means we could see a sharp, corrective USD spike on any headline, even if the underlying fundamentals suggest dollar weakness. This is why I'll be reducing my position sizes ahead of the minutes. Now let's look at the specific event calendar for today. At 7 o'clock Greenwich Mean Time, we get UK Core CPI YOY for July, expected at 2.5%, down from 2.6%. If we see a higher print, it reinforces the Bow's higher for longer stance, which is particularly bullish for pound sterling to US dollar because it widens the effective rate spread against the Federation. At 9 o'clock Greenwich Mean Time, Eurozone final CPI, expected confirmed at 2.5%. An upside surprise would trim prospective ECB cuts, pushing EUR higher. And at 6 p.m. Greenwich Mean Time, the FOMC Minutes, this is the main event. Dovish wording solidifies a Fed pause and breaks down the USD. Hawkish surprises could trigger a sharp reversal that I've positioned myself to react to the minutes, not to front-run them. But I've got both pairs levels ready to go. Let's start with the euro to US dollar, because it's the cleaner technical setup of the two. On the weekly chart, we are in a pullback from the 1.1915 high posted earlier this year. That's a bearish context on the highest time frame, but the nature of the pullback matters. We are seeing higher lows since early August. That's constructive. The question is whether this consolidation is a base for a move back to 1.1900 or a pause before further downside. On the daily chart, price sits at 1.1577. We are above the MA5, 1.1543, MA10, 1.1552, and MA20, 1.1557. This cluster between 1.1540 and 1.1560 is providing dynamic support. However, the structural MA200 at 1.1680 is a massive ceiling. That's rejected price 3 times in the last month. A decisive break above 1.1680 would be a major technical event. The daily RSI is at 53.56, neutral bullish with room to run. The ADX at 22.08 is the key. It's signaling weakening trend strength, classic consolidation. We are not in a trending market yet. We are in a range that's about to resolve. On the 4-hour chart, we are seeing a bullish channel that's being defended. The lower boundary near 1.1554 has held multiple times. The 4-hour MACD is flattish near zero, another consolidation signal. But the Williams %R at -36.36 is in the buyer bullish territory, suggesting momentum is building. On the 1-hour chart, we are neutral bullish, with price holding above 1.1554 but showing signs of stalling. The intraday conflict is expected ahead of a major event. The daily ATR is 0.0008, that's high volatility potential, meaning moves could be sharp and fast. I've seen this exact technical setup 3 times in my career. Twice it led to a violent upside breakout, once it didn't. The tell is the velocity of the move. If we see a quick spike above 1.1600 that immediately reverses, that's a fake out. But if we see sustained buying pressure that pushes through with increasing volume and momentum, that's the real deal. Now let's switch to the pound sterling to US dollar, which has a different momentum profile. On the weekly chart, the pound sterling to US dollar has established a neutral bullish trend over the last 2 years, with higher lows since late 2023. We are currently trading near the upper end of that range, which is both an opportunity and a risk. The 1.4000 level from 2022 is the ultimate upside target, but we've got work to do. On the daily chart, price is at 1.3535. We are holding above the structural MA50 at 1.3421. That's very significant. The MA50 is often the dividing line between intermediate-term bulls and bears. However, we are facing short-term resistance from the MA5 and MA10, both clustered near 1.3550. That's the immediate battle. The daily RSI at 37.76 is leaning oversold. That's actually bullish for swing traders because it suggests downside momentum is exhausted. The ADX at 29.42 indicates moderate trending momentum, which means we are more directional than euro to US dollar right now. On the 4-hour chart, price is consolidating around 1.3525, close to the daily pivot at 1.3520. The 4-hour RSI near 29.44 is approaching oversold. Classic setup for a bounce if we get a catalyst. The Williams % R at -79.41 is deep in short-term oversold territory. In my experience, readings below -80 often precede a momentum shift, especially at major support levels. The MACD on the daily is showing a minor bearish crossover at -0.001, effectively flat, which means the bearish momentum is very weak. It's more of a consolidation signal than a directional one. Here's the key difference between the two pairs. The euro to US dollar has weak trend strength, ADX 22, and a clear ceiling at 1.1680. The pound sterling to US dollar has moderate trend strength, ADX 29, and more room to run if it breaks 1.3550, with the next major resistance at 1.3600 and then 1.3650. So while both are bullish, the GBP has a more favorable reward-to-risk profile on a breakout. Euro and USD dollar setups. Now let's get into the actionable levels, starting with EURUSD Scalp Setup 1, bullish, euro to US dollar. The long scalp trigger is a clean break above 1.1585 on the M15 chart, not a spike, but a decisive close with momentum. Target is 1.1598, daily R1. Stop at 1.1574 at entry. Market buy on break above 1.1585. Stop at 1.1574 TP1 at 1.1598 R and R is 1.1 to 1. Tight scalp, Scalp Setup 2, bearish, euro to US dollar. The short scalp activates on a rejection at 1.1595 or a breakdown below 1.1565. Target 1.1554, S1. Stop at 1.1578. Entry. Sell on rejection at 1.1595 or break below 1.1565. Stop at 1.1578 TP1 at 1.1554 R and R is 1.1 to 1. Swing setup. Bullish breakout, euro to US dollar. The swing trade is a buy stop at 1.1605 to clear the heavy daily resistance. Target 1.1650. Extension to 1.1680. Stop at 1.1560. Entry. Buy stop 1.1605. Stop at 1.1560 TP1 at 1.1650 TP2 at 1.1680 R and R is 1.1 to 1 to 1.9 to 1. If Eurozone CPI misses, I'll look to short on a 1-hour close below 1.1550, target 1.1495, stop 1.1585. Trade setup, GBP a USD Scalp Setup 1 bullish pullback, pound sterling to US dollar. Buy on a pullback to structural support at 1.3520 with reversal confirmation. Target 1.3565. Stop at 1.3510. Entry. Buy pullback to 1.3520. Stop at 1.3510 TP1 at 1.3565 R and R is 4.5 to 1. Excellent scalp. Scalp Setup 2, bearish breakdown, pound sterling to US dollar, sell on a clean breakdown. Below 1.3515. Target 1.3485. Stop at 1.3535. Entry. Sell break below 1.3515. Stop at 1.3535 TP1 at 1.3485 R and R is 1.5 to 1. Swing setup. Bullish accumulation. This is my highest conviction trade. I'm looking to buy inside the structural support trough between 1.3430 and 1.3450 if a macro event artificially flushes price down. Target 1.3560. Extension 1.3650. Stop at 1.3390. Entry. Buy 1.3430 1.3450, if flushed. Stop. 1.3390 TP1. 1.3560 TP2. 1.3650 R and R is 3.2 to 1 to 4.8 to 1. This setup leverages the MA50 support at 1.3421, a level that has held multiple times this year. Now here's my interaction trigger for you. Between these setups, which one do you think has the highest probability? For EUR, the bullish swing breakout. For GBP, the support trough accumulation. I'll be watching both. Drop your vote in the comments, bullish or bearish for each pair. Risk management today is even more critical because we're trading two correlated pairs. If the dollar moves, both pairs move, but not always by the same magnitude. That correlation can amplify your exposure if you're not careful. My personal rule is to treat my total risk across both pairs as a single pool. For today, I'm risking 0.5% of my account on each scalp and 1% on each swing. But I'm only taking one swing setup total. I'll choose the better entry, GBP support flush or Euros breakout, based on price action. I learned this lesson the hard way during the 2019 Fed announcement. I was positioned in both Euro to US dollar and pound sterling to US dollar, and the 15-minute candle after the release moved 120 pips against me on both pairs. My combined loss was almost double what I'd planned. Now, I reduce my position size by 50% on event days and never double up on correlated trades. The ATR for EUR is 0.0008, for GBP it's 0.0009, both indicate high intraday volatility. With the FOMC minutes, ranges can expand to 100120 pips easily. I'm setting my stops based on those expected ranges, not on arbitrary levels. And I'm prepared for the scenario where both pairs move against me before reversing. That's why my invalidation levels are wide enough to avoid whipsaw. Remember, leverage is a tool, not a strategy. Protect your capital first, and the profits will follow. So here's the combined bottom line for the next 24 hours. The euro to US dollar and pound sterling to US dollar are both at critical pivots, driven by the same catalysts, UK or Eurozone inflation and the FOMC minutes. For euro to US dollar, 1.1600 is the battlefield. Break above targets 1.1680. Rejection sends us to 1.1494 for pound sterling to US dollar. 1.3550 is the pivot. Break above targets 1.3650. Rejection sends us to 1.3420. What I'll be watching is how each pair reacts to the UK and Eurozone CPI data. That will tell me whether the market is focused on inflation or growth. The FOMC minutes will then confirm or invalidate that narrative. I'll be covering the aftermath of the minutes in tomorrow's analysis. And we'll do a full weekly wrap-up on Friday to discuss the close and setup for next week. If you found this combined breakdown useful, make sure to subscribe and hit the bell. I publish these daily Forex setups before the London session, and I'm always sharing the levels that are on my personal watch list. One final thought before I go. The market is going to give us a clue today about the direction for the rest of the month. Watch the velocity of the yield moves, not just the price action. That's where the real information lies. Stay disciplined, stay focused, and I'll see you in the next video.